Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Palantir Technologies. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both the short-term and long-term investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations. So let's get right into it. Palantir Technology builds and deploys software platforms for the intelligence community in the United States to assist in counterterrorism investigations and operations. It offers Palantir Gotham, a software platform for governmental operatives in the defense and intelligence sectors, which enables users to identify patterns hidden deep within datasets, ranging from signals intelligence sources to reports from confidential informants, as well as facilitates the handoff between the analysts and the operational users, helping operators plan and execute real-world responses to threats that have been identified within the platform. Now, the company also provides Palantir Foundry. It's a platform that transforms the ways organizations operate by creating a central operating system for their data and allows individual users to integrate and analyze the data they need in one place. Palantir Technologies was founded in about 2003 and is headquartered in Denver, Colorado. Now, let's look at some news of the company. So Palantir Technologies announced last week that it has signed a multi-year enterprise agreement for its Foundry platform with Rio Tinto, one of the world's leading mining and metals corporations. Palantir software will integrate raw data from the multitude of disparate sources into a representative of critical mining operations. Rio Tinto will be able to make decisions and take actions using a single source of truth that combines operational and transactional data. This data resource will be available with the necessary security and privacy controls to its frontline and office-based workers. This is extremely important because for Palantir to have a higher valuation than just a governmental contractor, it needs a lot more of these commercial endeavors to go forward. All right, now let's, in other news though, the stock was red hot following Palantir's demo day last week as well. But let's go ahead and look at some fundamentals of the company. Now, the company has a market capitalization currently of $61.97 billion. It had about $743 million in revenue in 2019, but a negative $588 million in earnings. Revenue is currently forecasted to grow about 23.72% per year. Now, it's currently unprofitable and not forecast to be profitable over the next 3 years, though. But it is projected by the end of 2024, the company should have about $3.2 billion in revenue with positive earnings of around $203 billion. Now, the company's balance sheets look solid with its short-term assets exceeding both its short-term and long-term liabilities. It does have a stable cash runway. While it's unprofitable, it has significant cash runway for more than 3 years if it maintains its current positive free cash flow level. Now let's bring it back here. Now, what did the analysts say about this? Now, the analyst consensus right now is a moderate sell, by the way. The average stock price target is about $17.83 a share, with a high estimate of $30 a share and a low estimate of $13. Now, going over a few of the analyst reports, New Construct's report has it as an unattractive rating and recommends investors avoid it because the stock has more downside risk than upside potential. The CFR report has it as a sell rating. They say growth and quality model subcategories are the two largest drivers of their sell recommendation. But I foresee significant growth in the years to come if they can focus their attention on the commercial space and sector and not just on the governmental contracts. The governmental contracts are awesome and all, but they need to sustain their valuation. They need a lot more of commercial contracts out there. So my buy, hold, or sell recommendation on Palantir Technologies, here are my thoughts. Palantir has generated traction due to the economic uncertainty and the pandemic. The government uses its services to check the spread of the virus, and it is developing tools that will help the government with data related to the vaccines. However, with the availability of the vaccine, the growth from the catalyst might slow, with little reason to renew existing contracts when things become more normal, so to speak. Now, the bulls point directly to a few high-profile deals that the company made recently to support its long-term case, but we must dig a little deeper than that. How much revenue will those current contracts make? I do not question the potential of Palantir's technology, but it is equally difficult to justify the company's current valuation. The market's perception of Palantir's worth has changed dramatically in the last few months since it went public. Perhaps part of the company's failure to adequately get the story out prior to its listing, but it appears that it is also due to investor excitement getting ahead of the fundamentals. There is a tale of two valuation models out there. Now, Palantir has not released its full 2020 results yet, but the company said in November that it expects to generate about 1.07 billion to about 1.072 billion in revenue in 2020. Assuming that forecast bears out, the market is currently valuing the company at about 45 times sales. That's significant to note. If you compare that to the other IT-focused governmental contractors out there, Palantir looks way overvalued. But yes, I know none of these other companies have anything exactly to compare to the tech Palantir has, but the other companies have a range of technologies and a diverse revenue source, which Palantir does not have. The only thing I could do to justify the higher valuation would be to look at its commercial sector business, and yes, it is growing, and based on that, you could look at two commercial database specialists, MongoDB and Datadog, but the main chunk of Palantir's business is focused on the US governmental sector, and that's what they said in the statement as well. So they really need to focus more on commercial. Palantir was among the companies targeted by Citron last week as a short, with the investment firm writing back in November that Palantir is no longer a stock but a full casino. So I will bet that WallStreetbets Reddit campaign right now has something to do with the recent skyrocket in the share price. The stock is overvalued right now. Palantir has amazing, unique technology and has the potential to grow into a much larger business. But given the pace of governmental contracting right now and the slowing rollout of its commercial offerings, it will take years for Palantir's business to justify its current lofty multiple of 45x. My recommendation for those long-term growth investors, it's best to leave this one on your watch list right now in anticipation that there are going to be better opportunities to buy in over the months to come. I would target a price around $18 to $20 a share and hold for the long term. For those short-term investors out there, this might be the one on your watch list that trade the highly volatile swings over the next few months. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations. Until the next stock update later today, folks. Ciao.